Interning in tax. The intern. My name is Joshua Minnich. I am a student at the University of Southern Maine in the School of Business and am currently majoring in accounting. This internship was part of my coursework in the spring of 2012. This accounting internship, ACC 395, was with TDBank, America's most convenient bank. My official job title was tax analyst. Throughout the internship, I reported to TDBank's back office located at 41 Donald B. Dean Drive in South Portland, Maine. The internship began in late February of 2012 with the intent to continue for 2 years. I worked part-time during the spring and fall semesters and full-time during the summer. The bank. I want to take just a moment to answer some basic questions about TDBank. First, who is TDBank? TDBank is one of the 10 largest banks in the U.S. They employ over 26,000 people and serve over 8 million customers. A question a lot of people ask is, what is the TD in TDBank? TD stands for Toronto Dominion. Where is TD? TD is a Canadian-based bank with 2 headquarters in the United States, one in Cherry Hill, New Jersey, and the other in Portland, Maine. Currently, TDBank has stores all along the East Coast from Maine to Florida. What is TDBank's goal? One goal is to be America's most convenient bank. In addition, they desire to be the better bank, not only the best, but always continuing to improve. I was hired to intern in TDBank's tax department. The tax department's main responsibility is to address all the tax concerns of the entire bank. The tax department is divided into 2 distinct groups: tax accounting and compliance. Tax accounting is responsible for planning and provision. Compliance is responsible for preparation and payment. To the right you can see Kristen and Sherry. I have appreciated their patience in the past months as I began my internship at TDBank. I report directly to Kristen, who works with tax accounting, and work closely with Sherry, who works in compliance. Where the intern fits? Right in that cubicle, but specifically in compliance. As an intern, some of my major responsibilities included that of general assistance, which included tax research, assisting with various state filings, whether they be extensions, returns, or other taxes due, and responding to tax-related notices. Also, there is the REIT compliance test. This is a test which must be completed quarterly to ensure that the REIT complies with the Internal Revenue Code. Thirdly, K-1 collection, organization, and compilation. These are forms that arrive throughout the year which must be filed and tracked as they will be used for TDBank's federal return. The REIT. REIT stands for a Real Estate Investment Trust. A REIT is a company which owns and manages income-producing real estate. One of the main benefits is that the REIT receives special tax treatment, which reduces or eliminates its tax liability. To enjoy the tax benefit, a REIT must comply to the Internal Revenue Code subsections 856 and 857. There are many criteria which must be met, but for the sake of time, we will look at only 3. These are compliance tests. First, subsection 856C3 states that 75% of a REIT's income must come from rents, interest from mortgages, and other rental investments. Second, 856C4A states that 75% of a REIT's assets must be real estate, cash, and government securities. Lastly, 857A1 states that a REIT must distribute 90% of its income to its shareholders annually. the compliance test. Briefly, how are the compliance tests conducted? First off, financial data is taken from the REIT's financial statements, namely total assets and net income. Using many general ledger accounts, assets that do not meet the IRC requirements are deducted from total assets. This is done by filtering the general ledgers in the REIT by collateral code, or what property backs the investment, and removing the ones that are not backed by real estate. Then the remaining ledgers are summed, and that amount needs to be at least 70% of total assets. The same is done with net income. First off, we take net income and we back into gross income using the income statement. Then non-real estate income elements are removed. The remaining amount needs to be 70% of our total gross income. Finally, the 90% distribution test is conducted only at the end of the year. This is to assure that 90% of the REIT's income has been distributed. If the REIT is not compliant, it has 30 days to become compliant. After that time, it risks penalty and taxation. The K-1s. What is a K-1? A K-1 is a form issued to members of a partnership. It states the portion of benefits which are entitled to the partner. So,